Welcome to Explain the Charts, where we break down the complexities of financial markets with clear, actionable insights. Today, September 1st, 2024, we're taking a deep dive into the USDCAD currency pair, dissecting the recent news and examining the technical trends on the charts to gain a comprehensive understanding of the Loonie's current trajectory. Let's begin by examining the current events and news surrounding the USDCAD pair. Recent news suggests a divergence in the economic outlook between the US and Canada. While the US economy appears to be stronger, Canada's is facing headwinds, potentially weakening the Canadian dollar. Oil prices, a key factor impacting the CAD, have been volatile due to tensions in the Middle East. This volatility could further affect the Canadian dollar's value. Now, let's transition to the charts to see how these events are translating into price action. If we zoom out and look at the daily chart of USDCAD, we observe a clear trend of bullish momentum over the past few months. The price has been steadily climbing, suggesting a strong demand for the US dollar against the Canadian dollar. This upward trend is supported by a series of higher highs and higher lows, indicating a sustained bullish bias. However, it's important to note that this upward trend has been interrupted by recent price fluctuations, signaling a potential shift in momentum. Examining the daily chart, we can identify key price levels that are worth watching. The 1.3500 level served as a strong support level in the past, but has recently been broken, suggesting a potential for further downward movement. The 1.3600 level has acted as a resistance level, limiting the upward price action. Whether the price can break above this resistance level will be a critical factor in determining the future trend. Now, let's zoom in and analyze the 1-hour chart to gain a more granular understanding of the current price action. Switching over to the 1-hour chart, we can see a more volatile price action, with smaller fluctuations occurring throughout the day. Recent candles indicate a consolidation phase, with the price trading within a narrow range. This consolidation suggests indecision in the market, with neither bulls nor bears having a clear advantage. This indecision could be influenced by the recent news regarding economic divergence and oil price volatility. On the 1-hour chart, we observe a support level around 1.3450 and a resistance level around 1.3550. The price has been testing these levels repeatedly, highlighting their importance. A break above the resistance level could signal a continuation of the bullish trend observed on the daily chart. Conversely, a break below the support level could suggest a shift towards a bearish trend. Let's now explore the 15-minute chart for even more detailed insights. Shifting to the 15-minute chart, we can observe short-term price fluctuations, providing a glimpse into the market's current sentiment. Recent candles indicate a slight bearish bias, with the price trending downwards. This downward trend could be attributed to the recent news regarding Canada's weaker economic outlook and concerns about oil price volatility. However, it's important to remember that these short-term fluctuations can be quite unpredictable. On the 15-minute chart, we see a support level around 1.3400 and a resistance level around 1.3500. The price has been testing these levels, indicating their significance. A break above the resistance level could signal a short-term bullish reversal. Conversely, a break below the support level could suggest a continuation of the bearish trend. To recap, the daily chart reveals a long-term bullish trend with potential for further gains if the price breaks above the 1.3600 resistance level. However, the recent price fluctuations and the break of the 1.3500 support level on the daily chart suggest a potential for a shift in momentum. The 1-hour chart indicates a consolidation phase, with neither bulls nor bears having a clear advantage. The 15-minute chart reveals a short-term bearish bias, potentially driven by concerns about Canada's economic outlook and oil price volatility. Looking ahead, it will be crucial to monitor the price action around the key levels we've identified on each chart. If the price breaks above the 1.3600 resistance level on the daily chart, it could signal a continuation of the long-term bullish trend. However, if the price breaks below the 1.3450 support level on the 1-hour chart, it could suggest a shift towards a bearish trend. On the 15-minute chart, a break above the 1.3500 resistance level could signal a short-term bullish reversal, while a break below the 1.3400 support level could indicate a continuation of the bearish trend. The release of economic data from both the US and Canada, as well as any developments in the Middle East that could impact oil prices, will be key factors to watch. These events could significantly influence the USDCAD pair's movement. As always, it's important to conduct your own research, manage your risk effectively, and seek professional advice if needed. Thank you for joining us today, and happy trading!